All right, it's another week, another What the F happened. And
I don't think we're live. We're not live, Chris, on here.
Yeah, we are. Live 8, 9.
Oh, just hit that for me. Sorry, I'm delayed.
Right,
there we go. Sorry about that, folks.
All right, let's restart that. Welcome back to another week of What the F happened. Welcome to TikTok, Instagram, YouTube, Facebook, and everybody joining us for this weekly show where we rant, we rave, and we will argue all about the news. So what is in the news headlines dissected to a fifth grade level, put into perspective so you know how to make decisions in your life. And today, headline news, consumer prices, and in other words, like the prices we pay for things and the prices of everything rose 3.5% from a year ago in March, more than expected. What is the impact? The Dow is down over 400 points. Treasury yields jump. Holy crap, we're going the wrong way. Mr. Jerome Powell, what is going on? Inflation's going up, not down. What is the Fed going to do? Are they going to keep rates higher for longer like they said? Are they only going to raise, or are they only going to drop rates one time this year instead of the anticipated 3 that they mentioned that Wall Street made 6 or 7? We're going to talk about the impacts of what that means to your retirement, to your portfolio, and to your life. But we're also going to hit on some other things like the sheer number of dead people. I said that right. Dead people who are registering to vote in swing states. We have literal proof that dead people are registering to vote in the swing states at alarming rates. What does that mean? We're also going to talk about the magnificent the seven stocks inside the S&P 500 driving this rally, this crazy rally, unprecedented, but not really. And we're also going to get into a little bit about EV, gas, or hybrid, what's going on in the car market. These are just some of the topics that myself, Mr. Snaggy, and the famous Lazy Cash is in the house are going to go over. Stephen, anything you want to bring up before we go to the freaking commercial or whatever you want to call this thing?
No. Good morning. Just hanging out, feeling good today. It's the Masters this weekend. So I got my golf shirt on, ready for some golf, but we'll be in Orlando, Florida at the Experience. Mastermind kicks off tomorrow night with a dinner. So looking forward to seeing a lot of our clients and friends in Orlando. But I will be in the background watching golf the whole time because the Masters is one of my favorite tournaments of the year. But other than that, lots of news to get to. So we'll be right back.
All right. We'll be back to talk about dead people after this. All right, we're back at it with What the F Happens, and joined with us today is Mr. Lazy Cash in the house. I know TikTok and Instagram cannot see, but we got the famous Lazy Cash, our shop cat, here in the new offices, and we're gonna dive deep into this. There's a lot to cover today. Stephen and I have been dissecting the news over the last week, as we do every week, to come up with our rant, our rave, or our problems that we have with the overall markets. But let's get into this, because I think headline news is a good place to start, Stephen. And I want your take on this. We've been talking a lot about inflation. We've been talking a lot about the Fed. I mean, obviously Wall Street and probably most of you want the Fed to drop interest rates to ease some of the pressure of these high interest rates that were put in place a year ago to curb inflation, which it did. Inflation is coming down, but just not fast enough. And now inflation is ticking back up at what the markets feel and what the Fed feels are alarming rates, because the Dow is now down over 500 points. Ouch. So, Stephen, what do you take of this consumer prices rising 3.5% from a year ago? I mean, oh, that's a lot, man.
Going in the wrong direction. I mean, it's what we've been talking about. they haven't done anything to control this. I mean, the rates have come up a little bit, sure, but the balance sheet is still growing. I mean, they're not really selling it off like they said they were. As far as policy goes in the country and the world, I mean, there's multiple wars going on right now. All the shipping lanes are all blocked up. I mean, manufacturing costs are soaring, gas costs are soaring. I mean, it's a combination of everything. If anybody thought that, inflation was going to come down and everything was going to be glorious, I mean, I don't know where your head's been stuck in the sand, but there's no soft landing. We've been saying it now for well over a year now. Soft landing's not coming, so be prepared for it. I don't know what else to say, Chris. It's wild. Over 500.
Everybody needs to understand, when you look at economic cycles and different economic indicators, we always talk about leading and lagging indicators. And one of the things that's kind of got me miffed, on this, because I follow this stuff, I understand it better than the average person, probably better than some of the economists out there. But one of the things that's really interesting is usually when the Fed tightens and pushes rates higher, and they pushed them much higher. They went bonkers with rates last year, making it very expensive to get new money, but it didn't seem to impact the economy. People are still spending stupid amounts of money. They're out there buying things, traveling, going to dinner, and all the things that keeps inflation high. But then, like Stephen mentioned, you got major geopolitical risks. Geopolitical risks are basically, just think of it as global trade and all the things going on, with shipping lanes. You got a lot of pirates out there now. You got pirates out there like Pirates in the Caribbean taking over all these shipping lanes and trying to steal things and just slow everything down. And the world we know now is a global economy. Our economy isn't just the United States. Our economy is very reliant on trade with China, trade with the Middle East for oil, trade with lots of different things. And a lot of those relationships are massively fragmented, especially the Chinese relationship. I mean, they're talking about putting tariffs on things right now. If you saw the dude, he was talking about putting tariffs on Chinese imports and things like that, which maybe isn't such a bad thing. I'm not saying it's a bad thing, but geopolitical risks are definitely going to keep prices higher, because if we get things cheaper from India and China and the, we'll just call it the BRICS, if we get things cheaper there, and there's a lot of risks right now with that. And if they cut those ties, things are going to get way more expensive here. But the good news is in the United States of America, the land of the free and the land of opportunity, we must understand that we have more resources here than anywhere else. We can self-sustain. We can support this country's economy with what we have, but we're not doing that. We were, but we're not anymore. And those are some of the things to really pay attention to, in everything going on. And also, one of the big reasons that you're starting to see the prices tick higher, if you read the report, the CPI, which is a broader measure of goods and services across the economy, rose 0.4 for the month, putting the 12-month inflation rate at 3.5%, or 0.3 percentage points higher than in February. So one of the big reasons for this is oil, the cost of gas. Anyone seen the gas pumps? Here, let me come over here to Yahoo Finance, because they got a picture of the gas pump. Stephen, I don't know, you got it up on the screen there, but gas right now just ticked way higher, especially here in New York and definitely in California. In Texas, it's probably not bad. Florida, it's probably not as bad, but we're seeing all these prices go up. And when prices are going up, it's hurting us. Stephen, what is this report you're looking at saying?
Just about the gasoline one from Yahoo Finance. So just talking about how higher gasoline prices were one of the main drivers behind reaccelerating inflation in March. Rose over 0.4% from last month and 3.5% from last year. Gasoline index increased 1.7% from the previous month, jumping 3.8% in February. BLS noted that before seasonal adjustments, gasoline prices rose 6.4% in March. So heading in the wrong direction.
So let me break all this down to all of you and kind of just give you just a little snapshot of what potentially could happen because of what you're seeing in the news, what we just told you. More than likely, the Fed, Jerome Powell and the marching men and women over at the Fed, Satan at the helm, I think what you're going to see is they're going to probably hold rates where they're at. I don't think you're going to see a rate increase. I'm not ruling it out, but they're probably going to hold rates. And there's a lot of people here in the news saying that they're probably taking that rate cut that the markets were expecting to happen here soon, and they're going to push that out to September. And in September, depending on the data, we'll see what happens. But the markets have built in, and this is very important to understand, the markets have built in rate decreases. So the Fed, when they came out and said, we're opening the door for 3 rate decreases, the markets, for some reason, built in 6 or 7. I have a report right here saying that they built in 7 rate decreases. I don't know where they must all do the math different than me and Stephen do, because, I don't know where 3 becomes 6 or 7. I guess they got super excited thinking that everything was going to go, because, hey, listen, we are at record highs on the markets, in the Dow and the S&P 500. But when you look at that, you get excited. You're like, oh, things are good. Things are great. But do you really understand why? So here's what you really need to understand. Because inflation's ticking higher, because of these things happening, and they're not going to decrease rates, the markets are going to suffer severely. Just like today, down, and then breaking news, we'll get into that, former Trump. Yeah, anyway. But because of that, your portfolios are going to take a hit if you haven't made changes, if you haven't gotten ahead of this. But where does this all end? If we're putting so much emphasis on rates going down, we're putting emphasis on rates going down to what? 1 rate decrease, 2 rate decreases? There's so much speculation built into the markets right now. Like, I just want nothing to do with it. Stephen, I don't know, how do you feel about that?
Well, it's one of those things, where we're told one thing and the opposite is occurring, and there's a lot of political implications that come with this in an election year like we're facing right now, one of the most highly contested elections probably of our lifetime, which feels like the last 2 or 3 of them have been that way now. They keep accelerating worse and worse. But like when you look at what some of the people in the administration are talking about, so Janet Yellen is obviously the Treasury Secretary. And so she was out over the weekend in multiple interviews along these lines. I'll just play this. It's a 50-second
I believe
video.
Inflation will continue to come down.
Yeah, and I guess I'm just wondering if the economy continues to hold up no matter what happens on the Fed.
I think we've got a good, strong economy. We've got very strong domestic demand. Consumers are holding up. Some low-income consumers are perhaps exhausting their buffers of saving that they built up during the pandemic. We're seeing a little bit more distress at the household level there. But generally, households are in very good financial shape. Our financial system is generally quite strong. Things can always happen.
So my problem, Chris, with it is, why not tell people the truth? People are hurting, struggling right now. Everyone that goes to the grocery store, everybody that shops, everybody that fills up their gas tanks, but we're being shoved, buy electric cars. Don't worry, everything's great. There's no problems out there. Just look at this report that came out last week. This was 5 days ago. So this was from the AP, the Associated Press. These were jobs numbers that came out. U.S. employers added a surprisingly robust 303,000 jobs in March in a sign of continued economic strength. Now, from that, Chris, what's your take from that? It's great, right?
Well,
That's
all
awesome.
right. So let me give you that. So out of those jobs, how many of those jobs were created by the government? A lot.
Thank you. So if you dig into the numbers, literally all of the jobs were either part-time or government jobs. The U.S. economy actually lost 6,000 full-time jobs last year. And I could break this down even more into the numbers, but just generally speaking, headline versus reality versus people like this telling us just straight lies. So that's my problem with all of this, Chris.
It is a problem, but you also then have to understand we're in an election year. Like, it's always like this: lies, lies, and more lies. That's all it is. And the markets are always, well, I shouldn't say always, but almost always propped up or artificially kept high before an election. It just makes perfect sense. The dude doesn't want to lose. Listen, like we can transition this a little bit into that, but in an election year, things get wet, things get crazy. Lies start flying around. Like what Yellen's saying, is it a lie? No, but is it not? Is it the truth? Absolutely not. When you see the jobs reports come out on CNN or whatever news channel you follow, hopefully none of them, because they're all pretty much lies. But when you see that, like, do you believe it? Why is there always revisions to the job report after they come out? And why is it that they're posting robust job reports when most of the jobs are part-time or government jobs? Lies, lies, and more lies, or just gray area. Like, that's really what we're talking about. So it just makes it really hard for the average person to understand what's real and what's not. But I think what's real is understanding what's coming. What's this report show, Stephen?
It just shows the revisions. So like the AP releases a report and then it gets adjusted down. And this just shows the last 13 months. But of those, 71,000 government jobs, 39 construction, 49 leisure spring break jobs. But so when you look at the revisions over the last 13 months, the initial reading, the first revision, the second revision, and then the difference. So out of the last 13 months, it got revised down negative 45,000, negative 63,000, negative 19,000, negative 36,000, negative 58,000, negative 104,000. This got revised down from 209 in summer, June last year, down by a half, Chris. They were wrong by 50%. July, they added 49, so revised up. That was the rare month. And then in December, because of holiday jobs, but even in January, from 354 revised down 124,000. I mean, so these initial numbers, not only are they crap, because it's probably more like 105,000, but they're not real jobs. They're part-time and government jobs.
Yeah. So, it's just when you see the jobs reports and you get excited and the markets spike up, just realize, like, there's going to be a revision, and that's the revisions you're seeing. So it's not that the job reports are wrong. It's just they're not giving you the whole truth until you seek the truth. And I think that's the summary for the news. It's like the news isn't always wrong. It's just not telling you the whole truth. So then you have to dive deeper, like the jobs report, like Stephen did, and say, okay, you'll start asking questions. And I think this is what the new children of the world need to start learning. They need to start asking questions. Not just accept things for what they are, but start literally logically thinking through something. Okay, jobs reports is 300. Great. What were those new jobs would be the question that, we should teach our kids to ask. So, and I know your kids don't care about job reports, but I'm just hypothetically saying it. Like, what were those jobs? Oh, they were government created jobs. Oh, they were part-time jobs. Great. How much are the part-time jobs paying? Well, over here, Ray said those jobs pay $16 an hour. But in California, they just raised minimum wage to $20 an hour, which is having the complete opposite effect, because companies are freaking firing people and laying people off because they can't afford $20 an hour. McDonald's and Burger King, there was a whole report that came out on them, but we're not going to get into it. Like, they just can't support that. So what happens? Companies lay people off. That's not what they wanted to happen. But you see, if you're Newsom, your employees don't have to get $20 an hour. That's a pretty interesting thing. So his restaurant, he's still paying lower wages, even though they're increasing minimum wage to $20 an hour. I think, just when you see all of that, and I do want to hit Jim's question. So, Stephen, you want to read Jim's question there?
Yeah, just saying, he kind of disagrees. He thinks it is intentional, these job reports. They're putting them out purposely wrong. Otherwise, they wouldn't be revising them downward 10 out of 12 months.
So I think you're partially right, Jim, and I think I'm partially right, and I think we're both wrong a little bit. The job reports that come out, they're always going to be wrong because there's a lot of lagging information that comes in, a lot of lagging data that comes in that they have to revise. But like Stephen showed, those revisions, those aren't just lagging data. Those are just manipulation. Those are just complete, utter, like, just posting wrong numbers to make things look better than they are. But I'm going to transition this. I've got this interesting report. So when we talk about things look better than they are, let's see, where are we at right now? So the Dow Jones is down 479 points. S&P is down 1% or 53% or 53 points. And the NASDAQ is down 161%. So across the board, the Dow Jones is down over more than 1% right now. S&P is down 1%. NASDAQ's down over 1%. And the Russell 2000, holy smokes, is down almost 3%. So those are alarming. But when you think that's one thing. That's just a snapshot of today. But really, if you were to look at the markets, they're up. The markets are pretty much at just off all-time highs. But again, let's teach our children to ask why. Why are the markets at all-time highs? Is the economy really that robust? Is the jobs market really that high? Is the unemployment number really that low? or are we being fed a line of shit because it's a politician's world, and because it's an election year? Well, here is some of the truth. This is nobody would ever have access to. Well, I shouldn't say nobody, but you probably wouldn't have access to this. This is a family office. This is a report because we have a relationship with this family office and the owner. So we get their internal reports. Okay. This is called the house view. So their clients get this. And this is one of the best ones I've ever seen him put out. So he's showing the bull market. And what they put these out is to tell their clients, which if you understand what a family office is, they deal with extremely high net worth individuals. I think this family office starts at like the lowest level is $50 million in net worth, and it goes north of that. So when they put this report out, they're basically telling their clients what their view as a family office is of the overall markets and what they see coming. So in this report, I'm not going to read the whole thing. He's talking about the Magnificent Seven and the impact on the S&P 500. So I'm just going to show you this because I want you to understand things aren't always what they seem. If you're looking at the S&P, which obviously drives all the rest, so the S&P 500, the Dow Jones, those are kind of two barometers, but the S&P is literally propped up by 7 stocks. We've talked about this a lot. But how much of the total S&P's makeup is just these 7 stocks? Well, right here, the combined value of these Magnificent 7 stocks now accounts for 30.1% of all the S&P 500 index's combined market value of $45 trillion. 30% is made up of 7 stocks, folks. Just mull that over. Just think about that, okay? And those 7 stocks right now are really getting beat up. So the Magnificent 7 stocks, NVIDIA taking a huge hit today, and it's actually top line news. NVIDIA enters correction territory as stock falls 10% from all-time highs. Apple is suffering a little bit of problem in changing a lot of their manufacturing to India away from China. So a lot of the Magnificent 7 stocks are propped up because of AI, artificial intelligence. When we really don't even understand AI to its fullest extent of what the outcome could be or what's going to happen, I think it's Terminator, but that's just my opinion. But when you really look at this, the S&P 500 stocks, 30% of that is 7 stocks. Just do the math. I got to tell you, that's way out of whack. And those 7 stocks are all in the tech sector, all highly inflated due to AI, because they're all, for the most part, in AI, with the exception of maybe Tesla. But I would argue that Tesla's taken a beating too. So when you look at the Magnificent 7, accounted for 22.2% of the combined cash flow of all 500 S&P 500 members. Okay, and that has doubled. At the present, the similar contribution is more in line of 48.7%. So I read that wrong. In 2019, it was 22.2%. Today, it's 48.7%. I don't want to go into all of this, but when you really look at that and you look at these 7 stocks, NVIDIA, Meta, Amazon, Microsoft, NASDAQ, Alphabet, Apple, and Tesla, I think I got them all. When you look at those, what are all those companies in the business of? For the most part, technology. And if you don't think Tesla is a technology company, you don't understand Tesla. Like, Tesla isn't a car company, they're a technology company, first and foremost. And you'd understand that if you drove one of their cars, love it or hate it. We had an interesting thing about those. But so just don't believe everything you see. And just because it says we're at all-time highs, don't believe that that means good things are coming. That might mean we are literally at all-time highs. And the only way we can go from here is down, because I don't think, like Yellen, I disagree, we don't have a strong economy. We have an economy built on a house of cards in an election year that I think is just waiting to come tumbling down. Stephen, anything on that? And do we have any good comments coming in? I see a bunch of them from Edie and OTC Trader. And let's see, do we have anything coming in up here?
Yeah. Yeah, let's get to those. But just one, to your point on the Magnificent 7, they're actually even consolidating more. And now they're calling it, forget about the Magnificent 7. We now got the Fab 4. So it's even consolidating.
I just saw that.
Yeah, which is
my
pretty
gosh.
wild.
So now instead of 7, it's the 4 that are really making the bulk of the lift. So what happens when those 4 aren't? Well, I think you guys can all paint the picture of that one. So should we hit some of these questions? Let's see. Is there any good ones? Always opportunities. So
go ahead.
Let me just hit this one. OTC trader. There's always opportunities in every market. 100%. Okay, absolutely. But see, what we're talking about on this show, OTC trader, is really broad-based. I mean, the average person isn't you, who understands trading, understands how to find opportunities, in chaos or in this. But you go on to say there's always opportunities in every market. If the media is pushing for it, it is more often than not, or if the media is pushing it, it is more often than not, it is the opposite of the opportunity. I totally agree. If the media is pushing the video, the opportunity is something else. 100% agree with that. We're actually in a bull market right now. We are absolutely in a bull market, but it is a bull market that is literally driven by complete manipulation, speculation, and all the things I try to stay away from. So, I know we're in a bull market. We're definitely not in a bear market, but that doesn't mean that we're going to stay in a bull market. I think we will till the end of the year and even into early 2025 because of the election, and solely because of the election and the things that come along with that. Let's see. Edie says the markets are being manipulated as well. The drop is projections on what or when the Fed will cut rates. 100%. The market is being literally propped up on when will the Fed drop rates? And obviously the markets are kind of crying like little bitches today because obviously now they know that the Fed probably is not going to drop rates. So they're crying and selling off all their winners, which I totally understand that. Edie said, if Trump gets elected, they're going to let it tank. Probably more than likely. That's pretty common in what happens. Let's see. I'm just seeing if there's anything else. I think that's probably the important one. So let's move to the topic that is my favorite because it gets TikTok all riled up. But politics. Let's just get into politics.
Real fast before we get there, let me just wrap up real quick on the last little part about the economy, because there is one piece that I didn't want to leave out, and that is credit card debt and usage now, and it continues to surge. As you can see, it's far surpassed what we had in 2008, 2020, and just continues to rise month by month right now. So this is not a good sign when you compile it with everything else we've been talking about. So just another data point there to keep in mind.
Like, just keep that chart up there. I mean, just look at that, folks. And in TikTok and Instagram, I'm sorry you can't see it. It shows credit card debt. It's just a chart. It shows 2008, and then after 2008, it plummeted. And then 2020, it peaked. And then, as you know, after the pandemic, people on record levels paid down credit card with their stimulus checks. But then after that, it is literally, that's a double black diamond right there. If you were trying to go down that sucker's straight freaking up. So even if your portfolio looked similar or had a nice upward trajectory, if your family is living in debt and has credit card debt, the credit card debt is eating away anything your portfolio is making, and you're taking all the risk. I can't remember who it was earlier that said that they're seeing credit card rates at around 30%. You're seeing line of credit 7.5% to 9%. Right there. Lynn said, I noticed this week credit card rates at about 30%. Now totally used. So she's then just saying she used their private banking system to pay off all of her debts. She doesn't give a shit anymore. She's just like, hey, I don't care, but this is kind of crazy. And it is crazy. And when you look at how much debt there is out there for the average household, and a lot of it is credit card. That's how this economy looks so good. Credit cards and holding credit card debts. Families can't afford to do all this stuff they're doing for the most part. And just because they're employed, they're getting credit cards, because when you got a job, you got a W-2 income, good, bad, or indifferent, okay, you have a credit card and you can maintain your minimum payments, but that doesn't mean anything. If you're making a minimum payment at 29%, you're giving away all the money your household could possibly make. And then you're trying to get ahead for retirement by putting money in 401ks and investments. And all of a sudden, like, when you look at it, like, we do this for a living, folks. Like, that's what we do at the Money Multiplier and BYOBs. We literally show people, like, your boat, your household has holes. Like, it doesn't matter how much you make over here in the market, you're giving it all away over here. And people aren't connecting the dots. They're struggling to put money into 401ks and take risk and make money in the markets when they're building up debt over here to sustain their standard of living. And that's the sustainability of their debt is going to crush their entire, like, once all this goes down, once the markets give way, all of that debt is going to be exposed. People are going to lose jobs. They're not going to be able to make their credit card payments. And you're going to see what happens. You're going to see what we've been talking about for years and years. It's a very sad sad story, but it is a story that has repeated itself for decades, maybe centuries, where debt is the number one killer of people's wealth. And we always say it at the Money Multiplier. Don't mean to make this a commercial, but the fastest way to wealth is through your own debts and expenses. What that means is stop focusing on taking risk and putting money in the market. Start focusing on getting rid of your debt and recycling and recapturing the money you're giving away. If you're paying 29% to Visa and you pay Visa off with money you would normally put into the 401k, or you just take money from your savings and you pay Visa off, as long as you do the next step, which is take the money you were giving Visa and put it back into the account you used to pay it off, you are recapturing 29% in interest that you gave away. Effectively, with zero risk, you're making 29% because you're taking back the money you were giving away. It's the same freaking thing. But in today's education and in today's financial advisory practices, that is not being talked about. It's just invest more, invest more, invest more, invest more, take more risk. You want to retire? Well, we have to save more, or we have to take on more risk. I used to tell this story over and over, and I failed to just go to my clients and say, oh, wait, you want to retire at 62 with X amount of money? Great. Let's not invest more money. Let's not take on more risk. Let's come over here and let's take the money we would have invested and let's pay off debt. You know why you're not hearing that? Ain't no money in it for the advisors. Ain't no money in it for Wall Street. Ain't no money in that one for the banks. So ain't ever going to happen is the end result. Hence, why you're not hearing why the fastest way to wealth is through your debts and expenses. Sorry, I didn't mean to go long on that. I got on a rant. Woo! But we did tell them.
It's so important. I mean, so personal debt is over 1.1 trillion. So let's just check in on how the country's doing. So the country's national debt is now over $34.5 trillion. So we'll continue to monitor that.
Great job.
And just to kind of put that in perspective, I like these little, I've seen this visualized before, but not in a video format. So it's a 40-second video. I'm just going to play it real fast because it puts it in perspective what $1 trillion looks like. So we got a $100 bill, $10,000. Let's just see what this looks like.
Million doesn't look like much, but put it into perspective. That looks like a lot of money. It's 100 billion. That looks like a freaking skyscraper. Wow.
So just, I mean, that's $1 trillion. So we have more than that. I mean, it just puts it in perspective because you think of $1 million and it's like, that's a lot of money. It's like this big. And then you look at $1 trillion and it's like the size of a state. And then you look at 34.5 trillion in debt this country. And I mean, all the news coming out about Social Security is 175 trillion in the hole. And, you know, it's just, it's pretty wild, Chris. And so I just wanted to kind of hit that real fast. And then, you know, before we get over to the politics too, just little things, you know, like just again, looking at headline news, it's sort of bizarre to me. I mean, look at this headline right here. I can't access your screen. Okay, never mind. Keep going. For some reason, I can't share this screen right now.
Okay. Well, I mean, Blessed Beyond Belief over on Instagram said, haven't heard that track before. That was good music. So that made that video so much easier to watch because it was just a good track. But let me come over here. Some people are saying, I want to make more banks. In other words, they want to create their own banking system and improve and increase on that. I want to get certified and watch all the videos. Okay, yep. All right, let's see all these opportunities. Edie, this is another thing that we haven't talked about enough, and I think we're going to talk about it a lot more, but there's just always so much in the news. It's hard to hit this, but Edie said, if regional banks shutter, they are, and just to preface, they are already shuttering. I work very closely with a regional bank, a community bank here, and I'll tell you right now, they're shuttering. I know the president of the bank. We have discussions. We talk. The regulations and the things that are being put on regional banks by the Fed are literally making them shutter. It's not that they're weak. It's not that they're doing things wrong. It's not that they're like putting clients in danger at regional banks. It's the Fed imposing different regulations on them that is making them shutter. And that would be, that would be gobbled up by bigger banks. So I'm not going to read the rest, but just think about that. The Fed is putting tons of pressure on small community and regional banks. And the regional banks like Silicon Valley and all these other ones we heard about last year, some of them are literally on the brink of not making it. What's going to happen? Well, just look back to when Silicon Valley Bank and all those other banks that failed. What happened? Big banks, big commercial banks that have all the support of the Fed and the government swooped in and bought their assets up, right? Like UBS. Really a self-induced problem by the Fed with these regional banks, the Fed says it's not the taxpayers. Bullshit. It's always the taxpayers bailing it out. The assets of these failing regional banks, which failed because of the Fed and because of regulations and regulators. And then all of a sudden now what they're doing is they're taking all the small banks and making them into this. It's almost like the prophecy. It's almost just like everything that happened, back in you could go back to like 19.
All right, looks like we lost Chris, so I'm sure he'll be right back. Looked like he had some internet connectivity issues. Oh, there you go.
That was really weird.
Hey,
I'm hardwired.
You froze a few times and then you kicked off.
All right, yeah. So I don't want to go on too much more of a tangent, but like, is it really, are the banks failing, the regional banks, or are they being forced to fail so the bigger banks can buy them up, consolidate them, and then we got something very similar happening, just like we did in the early 1900s, right up to the Great Depression, where the central bank, in 1913, if I'm not mistaken, I'm getting my dates all screwed up, but where the Fed was created and where central banking came in. Are they trying to consolidate the banking so they have more control over our lives and the banking aspects? Hence why we are so passionate here about teaching every one of you, from TikTok to Instagram to YouTube to Facebook, how to take back control of their money by being the bank. Instead of relying on the banking system, learn how to copy the banks and be the bank yourself. It's life-changing. It's all I can say. But let's move on. I don't want to go on to too big of a commercial or tangent here.
Yeah, I was just going to show just real quickly. I mean, it's kind of interesting because you get like this article from CNBC. Hedge funds are selling stocks at the fastest pace in 3 months and stepping up short bets. So
what did that tell you?
Do hedge funds maybe know something we don't? But then you go over here and it's like this JP Morgan Pro says the Fed has it backwards. Rates need to be cut to lower inflation.
That's selfish.
That's one take.
Yeah.
So who do you listen to? And then I know you wanted to, before we got to the fun part, Chris, maybe just hit on the treasuries real fast since they are hitting all-time highs.
I mean, listen, I've been talking about treasuries for too long. It's almost like a broken record. I'm telling like what people should be looking at is they should look at their winners, take your gains off the table, know when to hold them and know when to sell them, sell high, get out of the high positions, take your profits, move them into the low positions, buy low. What can you buy low? Treasuries, especially today. I bet you any money, if I pull up my TD account and I look at my treasuries, I guarantee you the price of my treasury bonds dropped significantly today, which is awesome. It's kind of like OTC Trader said, there's always an opportunity. Well, that's a huge opportunity. Yeah. I mean, I'm down 1.38% today, and all I own are US treasuries. Why? Rates go up. Okay. Treasury price goes down. The bond prices go down. So what would that make? Would that be something I'd get nervous about? Hell no, that's a buying opportunity. So you just got to shift perspective. So what Stephen just had up on the screen is the yields. Here's the best thing. Buying low, normally, if you're doing stocks, has very little impact from an income standpoint. But buying treasury bonds when rates are being held higher for longer is great because you're buying the bond at a low price, but you're being paid a higher rate, a higher yield on your money. Like, what doesn't make sense about that? Like, you get your cake and your ice cream, and you get to enjoy it, if I said that right, but you're buying them low and you're being paid for the risk. And then when the Fed finally does decide to drop rates, you're going to make money because the price of the bonds will go up. Yes, you'll make less in income because the yield will go down, price will go up, you don't need to be smart to understand this stuff. Just if you know what an X looks like, that's all you need to understand. Rates go down, price goes up. Rates go up, price goes down. Any questions? And in the middle, just draw a line right through your X and just put interest rate paid or yield. The yield is really, really advantageous right now. It just is. You're being paid for taking no risk. Well, maybe time risk and interest rate risk, but you're literally guaranteed you're going to get your money back by the U.S. government. It is backed in the full faith and credit of the U.S. government. Now, unless you don't believe in the U.S. government as an entity to pay the debts back to you, then I don't know what to tell you. So anything else on that? I know we went super long on it, but it was worth it. I think it.
Yeah, man. Good stuff. We can get over to your tech stuff now.
Let's get into some fun stuff because I see dead people. Yeah. You guys remember that movie? I See Dead People. Well, we see dead people too, but in a different way. I don't actually see dead people. I see reports showing dead people registering to vote. Now, hell if I knew. I mean, this is a new one to me. I had no idea that when we die and go off to a better place, we can still vote here on Earth. Did you know that, Stephen? Dude, we still can vote. Obviously, cool. In this country, after you're long gone, okay, you're dead, you're buried, if you're in heaven, you can still vote. Well, Stephen, can you play this? Brandon in our office was nice enough to do this really good video showing you, not just telling you that dead people are voting, showing you how many dead people by the actual numbers are registering to vote. And guess where they're registering to vote? Stephen, what if you were a dead person and you wanted to vote to make the biggest impact, where would you vote?
A state where it's going to be pretty close. They call them swing states, I believe.
Swing states. You know, if you were dead, you were going to vote. You should want your vote to matter here, even though you're off in heaven and you're hanging out with Jesus and God and doing really cool shit. But down here on Earth, you would want your vote to matter. So therefore, you'd probably want to register to vote in a swing state. Can you roll that video? This is where we get to piss people off.
Yeah, absolutely. So just so everybody knows, this video is taken from the Social Security Administration website. If anybody wants to check this out. So let me play the actual video now. Here we go. Oh, I hope there's sound.
I hope so. If not.
Is it sharing? Oh, no.
It's not playing, no. We had a really cool narrated video. Brandon narrated it, literally going through the Social Security statistics, showing you how many dead people are actually registering in swing states.
All right, let me figure out how to get this into a browser. Just give me 1 second.
All right. So, but isn't that interesting? It's an election year. Crazy shit happens, but I didn't think we were going to get that crazy where dead people were going to just kind of come out of the grave and vote. It's a miraculous thing. I mean, listen, we just got done with Easter, oh my God, we just got done with Easter. And, we know what that's all about, but I had no clue that the follow-up to that was going to be dead people registering to vote. What's everybody think about that while he's trying to figure this out? We can talk about I See Dead People in the movie. That's great. But let's just talk about the impact of this. So this is a incredibly controversial election year. You've got Trump and the dude. Okay, that's basically what it's come down to. And then you got Kennedy. Now, Kennedy, I don't know, being an independent, I don't know if an independent's ever actually won. I know it's gotten close. Like, I would give it to, I would say that he's got a good shot. I like Kennedy. I think he's a good, he could be really good for this country, but then you got Trump and you got Biden and you got Kennedy. Like, that's about as controversial as it gets. The dude can't spit a sentence out, still to today. The dude slips up in his words all the time, showing like, well, I think the dude definitely has some things to say about things he shouldn't say. And every time he tries to get on his plane, he seems to fall down the stairs. And every time he tries to get off the stage, he seems to go right when it's exit stage left. I don't know. Like, it's just an interesting thing. But, sometimes it just bothers me and it actually upsets me. Like, we all know the dude probably isn't making the decisions. I mean, let's face it. So who is? But also, I find it pretty cruel that, they're basically, I feel like he's just a fall guy. I feel like they're just.
So I want you to take a look at the single match found deceased, which is essentially the total number of verification requests where the person on record the name, the date of birth, social security number, belongs to someone who is deceased. So if we go up to the top and choose the weeks, I'm just going to go back to the 16th. There's 2 states that if they go Democrat, they flip. The election doesn't really matter if all the swing states go Republican, Biden would win. So single match deceased. So if we come down, 1,337, Missouri,
Swing state.
and 4,571, Texas.
Swing state.
Again, going further up, the 23rd, going back to single match deceased, you got 447, Kansas, but the 1,321, Missouri, and nothing really major for Texas. What is it, 64? No. Texas is one of the lower numbers this week. So nothing alarming for Texas.
Can we play the second video we sent?
Going further up to the 30th.
Do we have that one queued up?
We have single match deceased.
Yep. Let me just figure out how to stop this now.
322 for Kansas.
Like, Brandon's just sort of going through.
See, 409 is a high number. New Jersey.
I don't want to turn it off. Hold on.
Keep going. 4,515,
Wow.
Texas.
But he's
I'll
just
just mute it
showing
for a second.
That's quite a lot of dead people registering to
how many
vote.
dead people are voting or registering to vote in
And then
in swing states. It's pretty interesting.
that is the
Where can you find those videos? That was a video done by Brandon in our office, so you can't find that video. But this video you can, that he's going to queue up right now, and we'll put it in the chat here. But so that video that we were just showing, I know, I'm sorry, Instagram. I should probably give you guys some props because we got. Let's see. Let's hook you guys up here. There we go. So this video right here is another video that was done. That one was just a video that was created internally. Brandon in my office follows this stuff and can't understand why dead people are registering to vote at record levels in swing states. So he made that video. It's not something that's available to the public, but this one is. Stephen, you want to roll this?
Yeah, and anybody on Instagram, Chris, just send them over to your YouTube at the Chris Naugle. It's a much better experience watching this each week.
Yeah, definitely.
And subscribe.
Yeah, hear that Instagram. And then also Instagram never gets to see lazy cash. So there's the lazy cash. All right. Roll it.
This is 270 to win. This shows the electoral vote count, and we can see these are toss-up states, the ones that don't have any color: Nevada, Arizona, Wisconsin, Michigan, Pennsylvania, and Georgia. Let's say this. Let's say Trump wins Wisconsin, Michigan, Pennsylvania, Georgia, Arizona, and Nevada. Republicans get 312 electoral college votes. Congratulations, Trump wins. Now, let's say that Texas turns blue. It's now 266 to Republicans 272. The other suspect state, of course, is Missouri. That would put Democrats at 276. So I wouldn't be surprised, based on the weird numbers we're seeing from the Social Security Administration, that come November, when they're counting the votes, they say, Trump won all the swing states. Congratulations. Whoa, what's this? An upset in Texas. Wow. All of those California transplants to Texas must have shifted the vote pattern. Take a look at this. This is
insane.
Yeah.
Just insane. I mean, I guess we don't know. Oh, sorry. Let me spin you guys around here. You don't need to look at my screen. We don't really know the outcome. It's too early, but like, just remember that. And like, when we start seeing things like that, oh my God, look at this upset. Texas just went. I don't know. I just don't know what to think of it, but it is an election year, and the dude or the dude's compadres, I'm sure don't want to lose, but by the pollings and by what you're seeing now, is there even a chance that the dude could win? Like, if it was a fair election, could the dude actually win? Stephen, what are your thoughts? I mean, I'm not saying yes or no. I don't know. But just by everything I see, it just doesn't even seem possible that the dude could win as of today. And if the dude,
there's a lot of
how long is the dude going to live? I mean, like, let's be honest, though. Like, we all know he's got early stage dementia or maybe full dementia. Like, how long can the dude live? That's a very viable question. It really is. If you look at actuarial tables, the dude probably should already be dead. But, you know, there's stem cells and all sorts of shit. So, Stephen, what is your take on it?
Yeah, I mean, there's a lot of play here. So, I mean, is the third party, is RFK Jr. gonna, affect this election? A lot of people are saying, he's running better than any independent ran since Ross Perot. And, what's that going to look like? Are those votes going to come from Trump or from the dude? I mean, I don't know. And so how's that going to affect things? All this voter, whatever you want to call it, is it secure enough where we can trust it? I mean, in 2016, everybody on the Democrat side said it was a rigged election and there's no way Trump won, and they don't believe the results. And then in 2020, all the Republicans said the same thing. So I just feel like in 2024, no matter who wins, I don't think we've done enough to gain the trust of Americans that regardless of which side wins, the other side's going to accept it. So I think regardless of what happens, it's going to be not great for the country unless something changes over the next 6 months. And I don't really see that happening. And so it's going to get wild going in November and beyond.
I absolutely agree with you. And it's going to be a crazy, crazy outcome when all the dead people are voting. Just wild how that works. But I never knew. I didn't know resurrection included dead people voting. Not to go there. I know that's probably crossing the line. But anyway, it's our show, so we can say what we want.
There are two last little things I wanted to hit before we kind of wrap the show up at 10:30 here. So first off, the news continues to just lie. Is it routers or routers? How do you say that word?
I think routers. I could get it wrong though.
Routers, whatever they are. They've been around forever, but they came out last week and said Tesla is scrapping its what they've called the Model 2, the low cost production electric car. And a couple hours later, and the stock tanked. And basically, Elon came out a couple hours later and says, Reuters is lying again, and then started to attack them all day and said they're just a dying news organization and they make up stories and that it's all false. So it's interesting to see kind of almost open manipulation of stock. I mean, Elon Musk was the left's darling for years and, bought X and said, I'm going to be a free speech advocate. I mean, he's literally battling Brazil right now. If you follow what's going on in Brazil, it's wild that Brazil has just shut down free speech, shut down social media. And Elon's basically like, I'm not going to comply. And so he's going to war with a country right now of Brazil, which is pretty crazy to see. But there's one last little 5-second video I wanted to play. And at the end of the day, the United States is still, as we say, Chris, the best house in a crappy neighborhood when you look at the world economy and everything going on. So even with all the debt, all the political mayhem, the United States is still the place to be. And until something drastic changes globally, which I don't think we'll ever see in my lifetime or my kids' lifetime, I think we'll continue to be the leader and lead the way. And this video right here just kind of, brings that point home as far as like, what is that that 34 trillion in debt? What is backing that US dollar? It's not gold. What is it? Well, it's the United States of America. And so when you hear people say the US dollar is backed by nothing, and I could just watch that on repeat over and over again. Just give me chills to watch the power and the might of our military. And we know so many different veterans and people in the military, Chris, and some of our favorite people in the world. And they're the ones who protect our freedom. So at the end of the day, it's all about the United States flag. It's about freedom. It's about defending things that are morally right and that we believe in. And at the end of the day, I have a very positive outlook on what that looks like moving forward.
I agree. And big shout out and thank you to all of our military men and women, our vets, and also our first responders. And a big shout out to our frontline truck drivers and anyone in the logistics space, moving goods and services through this country, making sure that this country can continue on and that we can just go to a grocery store and buy food and have water and all those things. We take for granted so many of the things that are so vital to our survival. We literally, most of us have lost the art of just going out and planting a garden, knowing how to do a garden. I grew up in a family where my dad always had a garden. And I remember he used to go out there with the rototiller. I remember as a little boy, I would like reach up and grab the handles of the rototiller. So I learned how to garden, but I just recently started teaching my daughter. Matter of fact, yesterday, me and Vivi, we bought some strawberries and some basil and some other things. And I have this little garden out in the back of our house, and we went out there and I taught Vivi how to plant them. I taught her we have to go out, every day, and we have to tend to these plants and make sure that the weeds don't overtake them and make sure they're watered if there's no rain. And I'm trying to teach her these simple things that are literally almost they're just lost in today's society because we've gotten so used to, we just get in our car, we go to the grocery store. Hell, you just go online or talk to Amazon and say, hey, Amazon, or hey, Siri, can you send me this? Alexa, send me some paper towels, send me some strawberries. Alexa over here is listening and she's probably going to send me some strawberries. But, what happens when logistics shut down? What happens when shipping lanes and boats keep hitting bridges? What happens when it's not that easy anymore? What happens when something bad happens like it did during the pandemic? You can't even get toilet paper. Like, do we know how to survive the old-fashioned way? Do we know how to self-sustain that? I would say no. So when we think about what we have here in the United States and what our military, our first responders, our truck drivers, and all the men and women giving the ultimate sacrifice, like, what are they giving it for? The ability for us to have the life we do. And we take it for granted here, and we start blaming and, for stupidest things. And also, the one thing I want to preface as we wrap this show up today, if you think the government gives things away for free, you don't belong on this show, and you also are completely lying to yourself. There's no free lunch, folks. No free lunch. None. Never has been, never will be. The government and the things that happen there where they try to bait people in, we're going to pay off your student loans, which I can't understand how the dude is able to go on, it seems like every day, like they're telling you how they're going to pay off your student loan when the Supreme Court ruled against that. Taxpayers should not pay off people's debt, but yet here it happens every single day. We see it in the news. Right here, Biden's new student loan forgiveness plan could help 30 million borrowers. Like, you know what that shit is? That shit is absolute buying votes. The dude is just buying votes because I don't even know how they're doing that. But I guess when you're the president, you can do whatever you want. But just understand, if they're paying your debt off, you're becoming a slave. If you're expecting the government to give you things, you're becoming a slave. Just understand what the trade-off is and then decide what you want your family's future to be, because that's the line in the sand you need to draw. We do live in the greatest country on earth. Do not forget that, but also do not forget to fight for that and support those who are fighting for that. When you see a military person in uniform or in camo on the plane, at the airport, at the grocery store, stop and thank them for their service. It is not hard. They will always respect that, whether or not they say much or not. Just do it. When you see a truck driver getting out of their truck, fueling their truck up, thank them for what they're doing. That is hard work not many people want to do, but it is what keeps this country moving. I'm done with that. Hopefully all of you will join us at 1 p.m. Eastern this afternoon for the Wealth webinar, where we're going to dive into how to take back control of your money, how to be consistent and persistent, and how to stop thinking that everything has to happen fast. Building wealth is a marathon. It is not a sprint. The sooner you realize that, the longer you will be wealthy. The longer you will enjoy the lifestyle you have. If you chase quick riches and quick gains and fast everything like, your way right away, you will be the next broke person. Stephen, anything you want to say in wrapping today's show up?
I love it. It was a lot of fun. We'll see you guys at 1 o'clock Eastern for Wealth webinar. We got some good stuff planned for today, so looking forward to that.
Awesome. Well, thanks everybody for joining us for another episode of What the F Happened. Thank you, TikTok, Instagram, YouTube, Facebook. We will see you this afternoon at 1 o'clock. Till then, enjoy your day.